Good day, everyone. This is Onion. It's Saturday, March 13th. This morning, I'm going to go over sundial growers with you. We're going to look at some detailed analysis and maybe some things of what to expect going into the earnings call. And I also give a valuation and what I expect going into the earnings call. We'll start off here with some negatives and positives that I see for sundial.
Okay, so the first thing we're going to look at is the negatives here, and there's only really two negatives that bother me a lot with Sundial, and that's the size of the share float and the recent dilution that they've done. Now, the share float we're gonna look at first. There's 1.6 billion shares, okay? And I know a lot of people, or not a lot, but some people are getting confused with what market cap is. Market cap is not what the company is valued at. It's not, or sorry, it's not what it's worth. This is the market value of it. So basically, it's the share float times the share price, okay? And it gives you what the market feels that it's worth, right? Now, what the market cap, what most people use market cap for is to either do quick valuations, right? So basically, when you do a valuation on a company, if I was going to do a quick valuation on Sundial, if I didn't know anything about it, I would use a price to earnings ratio, and it's with the market cap. But unfortunately, negative earnings, you can't really use the price to earnings ratio. So next, I would use the price to sales ratio because they have revenue. This is not a preferred way to do it, but it can be done this way. It's a little bit of guidance, right? So basically, they have it 40.3 times price per sales ratio. So what that is market cap divided into the trailing 12 months of revenue. So what that tells me is right now the share price is trading at 40 times the revenue, right? Startup companies are usually in around 20. A high rate for a startup company would be 30. Right now, Sundial is trading at a 40 time rate. Okay, and in comparison, blue chip companies are in around 0.7, 1, 2. So 40 is extremely high. Right away, if I valued this company, I would look at this and I wouldn't even be interested because it's trading too high. Right? What's happening is the share float. The share float is killing Sundial. The reason the price isn't going up to $2 because if it went up to $2, it would put a value of $3.2 billion on Sundial, which it's not worth that. That would be what 60, 70 times price per sales. That's why the investors, the bigger investors, or people that do this quick valuation, they're not buying right now because it's the share float is too high. Now we're going to look into the dilution because okay, so this is the dilution that everyone's worried about, and for the newer traders, I'm going to explain this to you. I'm going to explain it quickly. You might have to research it a little bit more, and for the newer like for the more experienced traders, just fast forward a bit. You're going to just listen to me talk for a bit here. But so the two offerings, one came on January 29th, and it was 100 Series A units. Okay, so what the Series A unit was is one common share and one half Series A warrant. Okay, so if you don't know what a warrant is a warrant is basically your right to buy a share at 80 cents. I think they're making the exercise price at 80 cents. So if you buy this, you're going to get 100 shares, 100 million shares plus 50 million shares at a price of 80 cents. Okay, basically that's what that is in layman's terms. Now, the Series B was 33,333,000. We'll say 33 million. It's the same thing. 33 million shares plus 33 million half Series A warrants. So they're buying the shares for 75 cents. They have to exercise the warrant at 80 cents. Right away, that's much lower than the share price. At the time it wasn't. At the time it was good. Like it was a little bit lower. I think January 29th they were getting closer to $1, but it was still under the share price. So immediately, normally when these offerings go out, it's good for a company, right? A company needs to make money. This is how they do it when they're public. But normally when they come out, there's time restrictions. They'll say you can't sell for 6 months, or you have to wait until the share price is over a certain price for 10 days, something like this. And every one of Sundials, you can exercise immediately after. So I could go tomorrow, buy this. Well, it's probably sold now, right? It's obviously done an exercise. But if they had this offering at that time, I could go the next day, buy all of this here, the most I'm paying or I have to get is 80 cents a share, and then I can start dumping this on the market. Now, offering number two, February 14th, the exact same thing. They had this time 60 million Series A units, one common share, one half Series warrant, and then 16 Series B units, same thing. One share, half a warrant. These ones were issued price a little bit higher, but this was also after the spike. So again, I could go and buy all of this. I only have to get $1 for my shares and $1 for or 110 for my warrants, and I'm making profit. And again, they're exercisable immediately, but they did put a stipulation in this time. Only whole warrants are exercisable. So, but that's obvious. That's always how warrants are, right? So, this is dilution. Basically, all of this, what they did here is they dumped 200 million shares onto the open market. Um, I think that's what they ended up selling, and they're getting sold. You know, they're getting sold, like they're getting dumped on the market. You can see when you guys call this barcoding or whatever, that's what this is. It's the dilution. It's computers, computer programs taking these 200 million shares and getting every last penny they can out of them, because the investor is not giving $100 million to Sundial for Sundial to grow. Like, sure, that's what it looks like. The investor is giving Sundial $100 million so they can turn around and make $130 million. They're dumping, right? So now, normally when this happens, the companies have to put out a disclaimer because, you know, the experienced guys know it, the institutions know it. That's why they all backed out, and that's why there's no institutional buying now. But you usually always have to send a warning out. And February 12th, they did. This is the warning here saying that there's no reason for the price to be up so high, that there's a lot of offerings put out, and that, you know, it's going to be very, very volatile for the company. Read this over. They gave you all the warning signs here. The dilution is huge, a huge problem, and the share float is a huge problem for Sundial. Okay, so now we're going to go over the neutral and good things about Sundial. We're going to look at the chart first. This is the 1 year chart. You can see all the action was here, right? But if we look at the short-term period here, um, here's a spike and here's all the action. Now, back in around this time, when things were dropping, I did a valuation on the company. I did a video on it. It's on YouTube. I think 3 or 4 weeks ago now. And I gave it a price target of $1.25. And the reason I gave it that price target is I have different ways of looking at momentum and averages and stuff. And I said to myself, if it holds 125, you know that that's the bottom. That was the bottom, right? And as you can see here now, the 21-day moving average and the 51-day moving average, if there was no earnings call coming up or anything, it would, you know, hit in around the 125 mark in about a week. You know, just the way things are going. So that's, to me, you know, the price going down, it doesn't sound like a good thing, but to me, it's a good thing because that shows stability, and it shows that you can see a trend going here. It's not just going all flip-floppy. So, you know, it's easier to evaluate and to give a price prediction when there's, you know, consistency like that. It's hard for me to explain. I don't really know how to explain it, but trust me, that's a good thing. If you look at the last, you know, week, there's been a lot of bullish daily indicators that have been triggered. I go through this daily and I post it to stock boards, but I'll go over it again. Like you can see everything. Momentum is now positive. MACD is going to go up and cross the average line very soon. Everything here is pointing up. If there was no catalyst like an earnings call next week, the price still would be going up, you know, probably a few cents per day. Now, if we look at the second, there was a few new analyst ratings, and I just want to go over them with you and show you the analysts that do this. I'd like to go in depth. I like to see everything. So they give a price target of 60 cents. That's their average target. So we look at the most recent targets here, and these are the analysts that give them. So on March 9th, there was a sell rating and a 40-cent price target. So it's just me. I like to look and see who's giving these ratings. So this is a fairly new trader with a negative average return. So, you know, I'm not going to say anything about that. You take this information as you will. Now we have a $1.15 price target here from this analyst, and it was on March 9th. And it was hold rating. So we look here, pretty good success rate and a good average return. So, you know, again, take it as you will. You got a sell rating here on February 22nd for 45 cents. And then another newer analyst, fairly decent, you know, it's not a bad rating or anything. And then you got Canaccord here. They usually always have Oh, never mind. This guy's a new guy. So, 50%, 2 out of 4 success rate. Yeah, well, that was way back in January anyway. These are the ones I would look at. And, according to the analysts, you can see which one you would tend to want to go with. So now we look at the other things here we got to look at is this Indiva deal, the Sundial and Indiva. This was back in, when was this? February 23rd. Um, on the surface, this looks good. And it's not a bad deal. Like, I'm not saying it's bad at all, but um, what I would say is look at Indiva. Here's the ticker here, and they trade on the Venture Exchange. And in Canada, up here in Canada, the Venture Exchange is similar to over the counter. They're not big enough to go on the Toronto Stock Exchange, so it's like a baby brother kind of exchange, right? Not a bad thing at all. And they also do trade over the counter in the States, but this is our Canadian over the counter. It's a very, very small company, and it was almost bankrupt before this happened. So I don't want to say anything bad about Indiva. I would just suggest looking at them because this is a catalyst that moved the price. This strategic investment. So look at Indiva and see how strategic this could actually work out. We're going to look at the. Oh, sorry, I was reading this report. I'm going to scroll up to the top. This is the Reuters report here, and I'm going to. I'll scroll back down slowly, and you guys can look at it and pause it, whatever. I'm just going to go over a few things that I look at, but this is a very good report to look at here. It has an average score. There's a bunch of different metrics it measures. Average score of 1 out of 10. So it's in the worst group of 304 stocks out of the whole stock market. It's the worst. Or sorry, the 304th worst in the whole stock market. Here's all the ratings here. You can see this is basically where they get the 1 from. Earnings fundamentals, valuation. The only reason this is 5 is because of that spike. Otherwise, it would be down in here. We look down some more. That's just valuation with peers. Where is it? I wanted to show you. Okay, these are the last 6 earnings calls. You can see each one was a huge negative surprise. Okay, so this is what the analyst in the market expects, and this is what they're actually reporting. So keep this in mind. The last 6 earnings calls have been terrible. And what has Sundial generated? Other than $600 million worth of cash and that $22 million deal, is that enough to push the earnings per share up? We'll have to see. I don't think so. Now we look down a little bit more. I want to show you one other thing. Like I said, if you don't get this report, these are good to get. It's very, very, very good. It shows you a lot of stuff. Like this, look at that, 200% year to date, still over. And as it dropped, people are sitting at 50, 60% loss, and it's still 200% over the price it was last year. It's very, very, very high. Yes, this one here. So we look here, insiders, CEO, board of directors, neither of them own 1 share in this company. The top institutional holders, the highest one owns 0.7% of this company, and altogether, I do this report every day. I believe there's 7.8% institutional ownership in this company, so the majority of shareholders are retail. So we're going to look at the Morningstar quant computer report. This one is fairly accurate. I like to use this one. It gives it a fair value of $1.84. Now the only thing I don't like about this is it doesn't have 2020, all of the 2020 or year-to-date numbers in here. So that's why it has a very high uncertainty. And it also it goes off of fundamentals and it also works off of momentum as well. So I believe that 184 price is because of the price movement when it went from $1 to $3 and then back down. I think that's what knocked this up a little bit. But until these numbers are plugged in, we're not going to get an accurate number. But this is fairly uncertainty is very high, but it gives you an idea of what the quant computers are thinking. So that's basically overall, the good, the bad, the ugly with Sundial. I'm just going to type everything down, show you how I come up with my valuation, and I'll show you that in a second here. Okay, so now I'm going to go over my valuation and where I think the share price is going to go next week after the earnings call. Now, I use a simple method. I usually use price to earnings, but I have to use price to sales in this model. But and I also have I have a formula that I put this through. And it's not a secret formula or anything. You know, you're probably saying here's some guy named Onion telling me he's got some secret formula. It's not a secret. I've used different TEV calculators and I've put different values in there, but it's kind of mine, so I don't like to share it. But if you need a record of proof that it works, just look. I've only been doing these YouTube videos now for a month, and if you look back on any of them, the last earnings call I did was for Neo. Everyone was saying $50. I said 37.50, and it actually closed at 37.59. So the values work. I'm not right 100%, but if you need proof, it's there. I'm not bragging. Just I'm not some onion head telling you the bad news, right? Like it's a proven method. So we look at the cash here. They have $600 million. You don't give that a multiple. It's worth 600 million. So we're going to go the price to sales ratio. We're going to say $55 million for the previous trailing 12 months. 20 time ratio makes it worth 1.1 billion. So it gives it a value of $1.7 billion. So now for the share price, you're going to take the value, divide by the share float of 1.8 billion, and that gives you a share price value of 94 cents. So that's what I think it's worth. Now, the earnings call, that's going to be a huge catalyst next week, right? Now, if a good call comes out, let's say there's a mention of a merger, or they, somehow increase revenue, or found a way to lower the cash burn per month, found a way to grow without continually giving offerings and diluting the shares, and how they're actually going to dilute, how they're going to fix the share float. If everything there, it's going to be $1.48. Now, one thing I've noticed, and in my formula, it's called like momentum or the wow factor or whatever. Lately with these companies, SNDL is one of those Reddit favorites, right? So I have here momentum, but I call this the stimmy value because there's a lot of stimulus checks coming out next week. There's an earnings call coming out next week, and the majority of these retail investors that invest in the sundial will most likely be throwing some money into it. So I add 10% to that price. So if this happens to be a good call, it's going to spike. It'll definitely spike to $2, maybe even over $2. But once the dust settles, $1.62, it would be a fair value, I think. Maybe in a week from now, whatever. It's going to be a nice day trade. If it's a good call, this thing is going to skyrocket. Because remember, the majority of people owning this is retail, right? So if it's a bad call, no mention of mergers, decreased revenue, higher cash burn, and continued dilution. This is one thing you're going to have to listen for in the call. They might not, hopefully they do not suggest a reverse split. They might, and right away, that's a bad thing. But listen to the way they word things. If they say they're looking at strategic ways to reduce the share float, or listen to the wording. If you hear anything about a reverse split, that is extremely bad news. But anyway, if they don't say anything about a reverse split, if it's just nothing special, nothing going on, it's going to be 75 cents. I believe a value of 75 cents is realistic, but again, the stimmy value of will bring it back up to 82 cents. I believe once the dust settles, it might spike up, it might go down 82 cents. Now, if a reverse split is announced, or if any indication of a reverse split is announced, it will drop to 45 cents. And it might not happen right away, but this is where I see it going. And that's why I think, and again, this is just speculation. I have a few friends that are analysts, and they like to pick companies like this that they know are going to reverse split. And then they give us some wacky price, like those two newer analysts did, at 40 cents, 30 cents. So when it does reverse split, and it eventually, the price drives down to 30 cents before the split, they look like geniuses because they called it. That's a common trick analysts do. I'm not saying that's what's used here, or what they're doing here, but it's just, I laugh when I see that, because if it is going to reverse split, I come up with a price of 45 cents, and those two younger analysts did as well. So I'm not saying anything bad. It's just, a coincidence. It's speculation, right? So anyway, that's what I see that's where I see everything going.
So overall with Sundial, they're going to need to have a good call, preferably a mention of a merger, or something, or increased revenue, just some kind of guidance that there is going to be growth in the future. If that doesn't come out of this call, then the price is definitely going to go down. So definitely this call is a huge catalyst for Sundial. Personally, I was holding puts for Sundial. I didn't believe it was going to be as strong as it was. I ended up, I had $2 puts, and I sold them last week because uh, the resistance, like the support that this company has, is amazing. Like I honestly didn't think it was going to be as much support as it was at the $1.30 mark. So I said the hell with it. I got rid of those puts, and a good thing because they're really starting to drop in value now. So this is an unbiased opinion from me. I'm not holding calls, puts, shares, nothing. I completely liquidated on Friday. I'm out. So good luck to everybody. I wish the best for you all, and it's definitely going to be an exciting day on March 17th. So take care of yourselves.